Good afternoon, everybody. Welcome to the 23rd Annual Property Review from Warrington & Co. My name's Stephen Fitzsimons, delighted to be your host here today. Even more excited to be wearing a shirt and tie for the first time in about 14 months. And of course, this is why we are doing it in this format here today, because of course the pandemic has curtailed much of our face-to-face activities. However, we still have a stellar cast lined up later on. Before we do commence, I need to thank our very generous sponsors by name, because we have got quite a few, so we really appreciate this. We have got Chancery Gate, Baker Mallet, CBRE, Faulkner Chester Hall Architects, Miller Developments, Orbit Developments, Pin Properties, the Cheshire and Warrington Local Enterprise Partnership, Muse Developments, and Turner & Townsend. Really appreciate your support. Many of you will know that Warrington & Co is the regeneration arm of Warrington Council, and we enjoy the full support of councillors and senior staff at the council. And that means that is why we're going to have the opening from a very familiar face. He's the Chief Executive of the council. He's also Chair of Warrington & Co. It's Professor Stephen Broomhead, MBE.
Welcome to the 23rd Property Review here in Warrington. COVID has been a difficult and challenging year for the town, but I think we've been resilient and our business confidence has remained and continues to grow. Whilst it's been a challenging year, the evidence you will see here today suggests that Warrington is a resilient place, and we've managed to maintain property investment and development in residential, in commercial and in leisure. A whole series of significant investments have occurred during this year, makes us and remains a buoyant economy here for Warrington. So thank you for your endeavours, your tremendous community spirit and getting through and beating the book in the way we have here in Warrington. And I think it's been a really excellent performance in what has been a challenging year. I'd like to thank the sponsors of this event for their continued support for what we're doing here, and Warrington remains the powerhouse for the north of England and indeed the UK. Thank you.
Stephen, thank you for that, and great to see the Warrington Wolves colours proudly on display there. As I said, we enjoy the full support of Warrington Council, and long may that continue. We've worked very closely with BE Group over the years. Now, if you don't know BE Group, what they don't know about the Warrington property market isn't worth knowing. They're very patient with us. They do some fantastic work, and Vince Samwell is the managing director. So we put him on the spot every year, normally face-to-face at one of the local hotels. But Vince is going to share his thoughts of the property market over the last 12 months, some observations for the future. So really appreciate the efforts of Vince and his team. So it's over to the man, the legend, Mr. Vince Sadwell.
Welcome once again to the Annual Property Review, now in its 23rd year and our second presented remotely. So hopefully we can shed light on how well the local economy is doing after a year of pandemic through our annual analysis of property transactions. Last year we were only just seeing the effect of COVID-19 when we reported our findings. 2020 though was a year like no other, and changes to our lifestyle, working and shopping habits and business confidence have all had a say in shaping the commercial property market. Some of the findings this year demonstrate how significant the pandemic has been, and not surprisingly, the retail and leisure sectors were hit hard, and there's been only a limited level of activity to report. But despite many of us working from home in the past 12 months, the industrial and the office sectors have been active, and the floor space levels are not out of place with the earlier years. That activity is reflected in the 2021 Centre for Cities Annual Outlook. That report identifies Warrington as one of the nation's towns with a strong economy, and that's only been marginally affected by COVID-19, and the report predicts only a short-term impact from it. That limited impact may well already be reflected in the number of new businesses starting up. A report by Capital on Tap records over 1,300 startups in the town. But the one note of caution to that research is that there are a number of firms based in Warrington that specialise in company registrations and host registered addresses, so a proportion of those startups may well be operating outside Warrington. Turning to the figures for the year, this slide shows the headline results in terms of floor space transacted, number of deals, and for investment, the value of sales recorded. And we record all industrial and office sales and lettings above 2,000 square feet. Industrial floor space let or sold amounted to 1,564,000 square feet, which was over twice the 2019 figure. The number of deals was 64, also up on the previous year. Office take-up, despite the work at home policy, was higher than the previous year at 277,517 square feet. With 2 deals accounting for a large slice of the floor space, the overall number of deals were down, and we saw the lowest number in a decade with 29 transactions. Investment activity was very quiet for the year, with just 7 sales reported and an investment spend of £30.46 million. Our analysis of the sectors showed that industrial last year really did boom, partly driven by the significant increase in online shopping as people of all ages hit their keyboards and smartphones to order online. The result, an increased need for warehouse property to help meet that demand. But it was also driven by the longer term demand for warehousing set against the growing shortage of supply across the whole of the Northwest. For Warrington, the take-up was the highest level since 2014. And whilst again Amiga featured with a number of significant transactions, other areas such as Winnick Quay and Birchwood performed well. And looking at the size of deals shown here, significantly there were 6 deals above 100,000 square feet across the town. At Amiga, Mount Park completed 2 new lettings at its development there, with the largest deal of the year seeing the meal in a box company Gusto take 308,000 square feet, and with forklift truck supplier Young Heinrich leasing another 185,000 square feet there. In total, Mount Park has now let just shy of 1 million square feet at Amiga. Hermes Parcel Net took 2 units, leasing 185,000 square feet at Winnick Quay and 105,000 at the Grange in Woolston. The remaining 2 in the top size bracket were Revolution Transport Services at Birchwood and a letting at Stretton to Avjon Limited. Moving down the size range, there was 1 deal in the 50 to 100,000 square foot range, 6 between 20 and 50,000 square feet, and 5 in the 10 to 20,000 square foot range, and 48 deals below 10,000 square feet, of which 34 were below 5,000 square feet. The next slide shows deals by area, and we recorded over 500,000 square feet at Amiga, around 300,000 square feet at Woolston Grange. The Birchwood and Risley area netted over 250,000 square feet, and Winnick Quay and Gemini 230,000 square feet. So a good spread around Warrington's main estates. When we look at the leasehold freehold split, as always, the vast majority, indeed in this case over 90%, were leasehold, and notably 14 of the largest deals were let for a period of 10 years or more. Average rents are now in the region of £6 a square foot, with 18 of the deals hitting £7 or above, and the highest level saw a rent close to £8 a square foot being achieved at the Penketh Business Park. The highest sale figure was for a 4,500 square foot unit at Presswood Court, selling for £80 a square foot. And looking forward, there's some pipeline development planned in the town. Birchwood Park led all its newly built space, and so may well roll on with another phase. Tungsten Properties are planning to build 240,000 square feet on a site at Appleton. Canmore have submitted plans for a 9-acre site bought from United Utilities at Lingley Mere, and Chancerygate and Hines have consent for around 100,000 square feet in a number of small units at Gemini alongside the M62. Moving on to the office market, and while the floor space figures suggest yet another average year, looking behind the headline figures, it's clear that the market has suffered. Performance in the first quarter was as good as any year, but that was really a result of deals agreed before the full effect of the pandemic was known. Also, 2 deals boosted the floor space figures, with the council taking possession of its 82,000 square foot office at Times Square in the town centre, and BT leased 54,000 square feet from the Borough Council at Stamford House in Birchwood, the 2 totalling around 50% of the floor space for the year. There were some notable deals, and looking at the size range shown here, There were 4 more deals above 10,000 square feet, including 2 lettings at Centre Park to Skin City and to the NHS, and at Birchwood, Flexera Software took 17,000 square feet. The 4th was the sale of the former NatWest Bank on Winnick Street, which is planned to become a hotel. Below 10,000 square feet, we saw activity drop significantly. In 2020, there were 22 deals, compared with 34 the previous year. 3 of those were to house builders, reflecting a housing market that's remained strong during the pandemic. Miller Homes and Kellen Homes took space at the council's Birchwood Park, whilst Churchill Retirement Living opened an office at Olympic Park. Looking at the deals by area, the Birchwood area accounted for 8, whilst there were 9 deals in and around the town centre if you include 5 at Centre Park, and at Wilderspool Causeway to the south of the town there were 3 completed lettings. Birchwood Park recorded the highest rent, with £20 a square foot being paid by Hoover Candy, and that's an expansion to its existing office, while at Centre Park and Wilderspool both maintained rents at around £17.50 a square foot. 20% of the deals were sales, with 2 the Churchill office at Olympic Park and a period office in the town centre bought by a property management company, Brenrun, both achieving prices above £120 a square foot. The investment market was very quiet, with just 7 deals recorded, compared with 24 the previous year, and it seems the pandemic cast doubt on whether properties would sell and at what price. So as a result, at least in Warrington, opportunities were few and far between. The office market, the retail market and the leisure market in particular suffered from a lack of confidence, and understandably, as properties in those sectors stood empty. The table here summarises all of those deals with yield data where it's available shown. A single office transaction was recorded with a private client to Deutsche Bank buying the Fire and Rescue HQ at Lingley Mere for £19.3 million and a yield of 7.3%. Whilst the Birchwood Shopping Centre, together with Spencer House office block, was sold as part of a larger portfolio. Other retail transactions saw the Pound Stretcher unit, located alongside Bank Station, sell for an undisclosed sum, and the Range building on Winnick Road was bought by Urban Logistics for £4.8 million and a yield of 7.4%. With a strong logistics occupier market, there is still an appetite for warehousing, with yields dropping across the region. And for Warrington, there were 3 deals, all achieving sub 7%. 2 at Woolston Grange and Milner Street, just outside the town centre, were part of the same portfolio sale with a yield at just above 6%. As the year closed, the market did seem to strengthen, with a number of investments coming to the market. Mount Park are seeking buyers for the completed first phase at Omega, and it will be interesting to see where the yield settles for a prime industrial investment in the current market. And a number of offices are being offered for sale, but what's noticeable is there is interest for well-let space, but buildings with vacant office space, which might have been snapped up 18 months ago, not surprisingly, just don't seem to be attracting the same level of interest today. Moving on to retail and leisure activity in the town, although 2020 saw periods of shutdown for the leisure and retail sectors, there was some positive news coming out in Warrington. Perhaps the biggest positive in the town centre was the opening of the new market building within the Times Square development. Home to around 50 independent traders, these include both retailers and also food and drink traders located in the Cookhouse. Although shut in the early part of the year, the market's been able to trade through the latest lockdown, selling essential goods. And in its short period of trading, the market's already picked up a collection of awards locally and nationally, and that includes the Market of the Year in Cheshire Life's Keep Life Local Award. On the leisure front, Gravity Active Entertainment opened up in Times Square, complete with trampolines and climbing wall. Gulliver's World Resorts received planning consent for an extension to the theme park, which will see camping, chalets and a woodland zone. And construction started on the new youth zone at Winnick Street. A couple of hotels are proposed in the town centre. A 126-bed hotel has just received consent to be located near Centre Park. And a 16-bedroom apart hotel on Winnick Street, which I mentioned earlier, is also seeking planning permission. And all being well, Warrington will host games in the Rugby League World Cup and Disability Rugby League event in the autumn, and hopefully back with a live crowd for those games. There are only a few retail openings to report in a difficult year for the non-food retailers, when shops such as Debenhams will not be opening its doors again in the town. Those openings included Wren Kitchens at Junction 9 Retail Park, Angling Direct at the Cockegg Centre, and B&M Bargains opened a new superstore at Riverside Retail Park. The final sector to report is residential, and despite a near complete shutdown of the market in early 2020, activity picked up quickly and over 1,300 sales were recorded in the town during that year. That was down on the previous year, but even so, prices rose with an uplift in demand, and across all house types, values rose by around 3.2% in the year. The average price for a house is now £217,000, with flats averaging £108,000 and detached properties £335,000, as can be seen on this table. Family housing accounts for the vast majority of sales. 43% of all sales were for semi-detached and a further 28% were detached. The apartment market was small, but actually no different from previous years, as flat sales normally only account for around about 7% of the total. House builders kept building and 559 new completions were recorded across 70 schemes, as can be seen here. 131 of the homes were affordable, and that's 23% of the total. The most active area was Great Sankey and Whittle Hall, and much of that development fell into the new housing areas of Amiga and also at Lingley Green, with Miller Homes, Redrow and Bloor Homes all building there. A David Wilson and Barrett scheme accounted for most of the Appleton completions, whilst Mulberry and Dane Plus Housing were building in the town centre, represented by the Bewsey and Whitecross wards on the chart here. Looking forward, there are plenty of pipeline schemes, with a further 617 houses planned for Amiga. Taylor Wimpey are looking to build 161 homes close by, and House, the Urban Splash brand, is planning 228 properties in Grappenhall. The apartment market is strengthening in the town. The High Street Group's 362-unit, 8-storey scheme is taking shape next to Central Station, and another tall block, 9 stories this time, is proposed on Mersey Street. And apartments are planned in Latchford on the former social club site, where Weaver Vale are developing for the affordable rental sector. And finally, Warrington Council's own housing development company, Incrementum, have new mixed schemes for the build-to-let sector in Birchwood and Great Sankey. So that's this year's run through the findings of the report. The detail and all the deals are provided in the report you'll receive following this presentation, and maybe next year we'll be back presenting to you live.
Vince, thanks very much for that. I think if we had gone back 6 months and predicted some of the activity and to get to that level of detail, I'm sure many of us wouldn't have been able to do so, because it's been a horrible year, as we all know. So to see the green shoots and activities continue has been really encouraging. And indeed, even over the last few weeks since the BE Group put together the report, I'm sure you read in Warrington Worldwide on the 8th of April that Warrington had been voted the best area to live and work in the UK, according to RM Mortgage Solutions. So a real injection of, or vote of confidence there. And then just yesterday on the 21st, the former service station on the M62. So construction has started there by Chancery Gate and Hines on a £19 million scheme, which is going to be called Gemini 8. So yes, it's been challenging. However, people have cracked on and continued some of these projects. So long may that continue. And they will have the full support of Warrington & Co as ever. Now, we could look at these trends in isolation. However, we do need to have a look at the national picture and the regional picture. And Vince mentioned some of the sectors there. We do benefit in Warrington from having the nuclear sector, for example, which means that they have got the longevity of 25-year contracts. So thankfully haven't been as badly affected from COVID, and also the distribution logistics sector, who have been recruiting en masse because everybody's been ordering from home. So no doubt our next speaker, delighted to welcome her here for the first time. It's Heather Standage from Cushman and Wakefield. Over to you, Heather.
Good afternoon. I'm Heather Standage, an associate in Cushman & Wakefield's Development and Strategic Advisory team. It's a shame that we can't be all together enjoying the usual hospitality of the annual property review, but I'm sure that you'll find this virtual version of the event informative and engaging. As the others will be focusing on what's been happening in Warrington, I thought I'd provide a bit of a wider contextual market overview of the key trends and changes we're experiencing in each of the key property sectors, nationally and regionally over the last year, and what we can anticipate from 2021. Starting with the industrial sector, as we all know, 2020 was a record year for UK logistics, with the annual take-up soaring to an all-time high of 50.4 million square foot. The North West accounted for 9% of this take-up at 4.7 million square foot. The COVID-19 pandemic and resulting lockdowns accelerated the shift to online shopping. Online sales doubled in the space of just 9 months, a rate of growth that took 5 years pre-pandemic. This led to a surge in demand from e-commerce and post and parcel operators that accounted for nearly 40% of annual take-up. Amazon alone accounted for almost a quarter of space taken up, acquiring over 12 million square foot across 21 units. Several requirements also originated from retailers needing to find extra space to accommodate the surge in inventory levels at the onset of the pandemic, including NHS-driven PPE supplies and Brexit-related stockpiling. Thanks to the high volume of transactions, availability fell by 14% to 61.6 million square foot, leaving some regions facing a real shortage of suitable stock. In the North West, availability is currently estimated at around 7.5 million square foot, of which around 23% is of grade A quality. As a result of the shortage of supply, prime rents grew by 4.3% nationally, the fastest annual rate since 2018. Prime big box rents in the North West are now at £6.75 per square foot, on a par with the East Midlands. Developers have sensed the opportunity, and speculative development appears to be picking up again after slowing during the pandemic. We're currently tracking around 6 million square foot of committed speculative development nationally, suggesting that in 2021 we will surpass the 7.7 million square foot delivered in 2020 as new sites continue to be brought forward throughout the year. However, just 500,000 square foot of speculative space is currently under construction in the North West, which could present challenges. Given the challenges facing the high street, there was some anticipation for retailer release to logistics space. However, to date, there has only been a limited amount of second-hand stock released to the market. Going forward, and in response to Brexit, we may see some companies shifting their imports or exports away from the traditional heavily congested international gateways, such as the Port of Dover, to alternative logistics corridors. We're already seeing new connections from the EU to northern ports and opening up new routes. The first 8 English free port zones were announced in the March budget, including the Port of Liverpool. Designed to encourage development and the creation of new jobs, occupiers within the free ports could be eligible for a series of attractive incentives, including temporary stamp duty land tax relief, enhanced capital allowances, and business rates relief. Turning to consider the office market, the extension to the government's furlough scheme is likely to have slowed the rise in the unemployment rate, which climbed sharply during 2020 and is now at its highest level since 2016 at 5%. Although positively, it remains comfortably below the peak of 8.4% in the years following the global financial crisis of 2018. In response, demand for office space, given that we're a service sector-led economy, remained subdued throughout 2020, with take-up for the year totaling just 7.7 million square foot. This was comparable to the period immediately following that global financial crisis. Turning to consider the office market, the extension of the government's furlough scheme is likely to have slowed the rise in the unemployment rate, which climbed sharply during 2020 and now stands at its highest level since 2016 at around 5%. Although positively, it remains comfortably below the peak of 8.4% in the years following the global financial crisis of 2008 and 2009. In response, demand for office space, given that we are a service sector-led economy, remained subdued throughout 2020, with take-up for the year totaling just 7.7 million square foot. This again was comparable to the period immediately after the global financial crisis. In the North West, while down on the 5-year average, take-up remained fairly robust compared to other regional markets. This has been predominantly driven by the strength of Manchester, with the large cross-section of occupiers, a talented labour pool, access to an international airport and a global profile. Take-up in the city neared 830,000 square foot in 2020. Whilst this was the first time take-up fell below the 1 million square foot mark since 2013, it was the highest of the big 8 cities outside London, and by far was underpinned by BT's pre-let of 175,000 square foot at 4 New Bailey. Nationally, availability continued to rise as more second-hand stock was released to the market, alongside the reduced levels of take-up. However, there was a noticeable difference between regional markets, with some witnessing gains in supply balanced out by falls in others. Overall, the vacancy rate in the regions remained relatively stable at 7.5%, comfortably below the 5-year average of 8%. In Manchester, the vacancy rate rose to 13.8%, but this was a result of 5 new developments completing last year, adding around 900,000 square foot of good quality supply. As development viability has continued to constrain supply in many locations, the Northwest is actually really well placed to take advantage of some of the emerging trends around occupiers north shoring out of London and the government's levelling up agenda. UK office investment turnover rose to 4.2 billion in the final quarter of the year, more than double the previous quarter, but still a third below the same quarter the previous year. The increase in activity signals renewed confidence in the sector after fears over the effects of working from home on occupational demand. Many businesses have now positively indicated that the office remains important despite changing working practices. It allows for collaboration, interaction and training that simply cannot be replicated at home. With the future likely to embrace more flexible working patterns and heightened focus on staff well-being, we anticipate more occupiers to consider the reconfiguration of their office space rather than a reduction. Despite many occupiers being tied into long leases, we have not witnessed a surge in subletting of surplus space in the region. And whilst more flexible lease terms have been sought, this was a trend that was ongoing and occurring before the pandemic, and it's simply been accelerated as a result. Overall, we have seen more activity in the office market since the start of the year, with many occupiers now preparing to get staff back into the office. The positive news and progress around the UK vaccine rollout has supported this outlook. In terms of retail, the continued crisis gripping the high street saw more retailers filing for CVAs and administrations during 2020, with Debenhams and Arcadia among the most notable casualties. 2020 was certainly the worst year on record for retail failures, with over 100,000 employees affected. The third national lockdown will have piled further pressure on struggling retailers, as well as food and beverage operators. However, unsurprisingly, the online sector continued to perform strongly, with online sales doubling between March and December. Overall, online accounted for nearly 30% of retail sales in 2020. Whilst both the retail business rate discount scheme and ban on eviction of commercial tenants has now been extended by government, giving retailers some breathing space, the sector does remain nervous about the post-Brexit abolition of tax-free shopping that will see international tourists no longer to claim VAT refunds on items purchased in the UK. In what remains an occupier market, retailers continue to actively negotiate with landlords to secure rate reductions and more flexible terms, often in the form of shorter leases with breaks or performance-based rents. The demise of Debenhams and Arcadia in particular have left sizable voids on many UK high streets. Against this backdrop, a growing number of landlords are considering the repurposing or redevelopment of their assets, including to residential or commercial-led mixed-use schemes where planning and lot size allow. One such example is the former flagship Debenhams store in Manchester city centre. The Grade 2 listed Rylands building obtained planning approval in January for conversion into commercial office space, including a 4-storey rooftop extension. The ground floor will revert to the original 1930s configuration of an arcade of smaller retail units, and the basement converted into shopping, dining and leisure facilities. Supporting the regeneration and post-COVID economic recovery of town centres continues to be a focus of government investment through initiatives such as the Future High Street Fund, of which Stockport, Winsford, Birkenhead and Stretford will all benefit, alongside a number of other centres where provisional offers have already been made regionally. A further 9 North West towns were awarded a combined £211 million to share from the government's £1 billion Towns Fund in the March budget, with Southport being the big winner, with a £37.5 million pot of investment towards projects including Waterfront Events Centre and regeneration of Lord Street. Bids are now being sought from the new £4.8 billion Levelling Up Fund, which will invest in projects that support town centre and high street regeneration, local transport and cultural and heritage projects. In Warrington, as I'm sure will be covered by the other speakers, we are already witnessing an impressive and exciting programme of town centre redevelopment and regeneration projects that will ensure the town is well placed to maximise its potential in the long term and following a sustainable COVID-19 recovery. To bring the market review together, we at Cushman & Wakefield think that global themes that will drive the UK property market throughout 2021 and beyond are demographics. Macro trends, including an ageing population, are only part of the story. The demographic profile of the building's users, be that industrial, office or retail, will have a strong influence over asset management and investment strategies. Secondly, sustainability. The era of measuring and managing both the environmental and social impact of real estate has begun. The governance and legislation of our sector have become vital in our fight against climate change, and we're already seeing social value being a key criteria in the pitching for bids and tenders. Technology. Technology has made a fundamental difference to the way in which we construct and use buildings. Moreover, technology has become a source of demand in itself, with increased requirements for data centres, fulfilment centres and high-tech manufacturing facilities. Are we ready for an age of real estate for robots? And finally, wealth accumulation. The biggest developments, portfolios and property funds are only getting bigger, and this is in order to satisfy the need of the largest companies and investors to gain market share. Meanwhile, the COVID pandemic has threatened wealth equality. Whilst the wealthy will be a critical part of the post-COVID recovery, those less fortunate risk being left behind. So that concludes my whistle-stop tour review of some of the key trends impacting upon the main market sectors. But if you'd like to learn anything more about what I've covered today, the Insight page of Cushman & Wakefield's website provides a wealth of research and thought leadership from our industry experts. Thank you.
Heather, thanks very much for that. You spoke about some of the funds that have been available and are available. Warrington's got a really strong track record in bidding for these central government pots of money. Recently, the Western Link, for example, was something that we were successful for. And then, of course, the Town Fund, which no doubt John Laverick will come on to mention. The Levelling Up Fund, which is fairly recently, so we are collectively working really hard to identify and explore the opportunities for Warrington. So rest assured that everybody is giving it their full effort and support to secure the best possible outcome for the town. I should have said, Angela Hankey has kindly reminded me, it was remiss of me at the start, we are on Twitter. There's a hashtag WAPR 2021. That's hashtag WAPR 2021. So please do let the world know that you are here this afternoon. Now, on to the final presentation. So Warrington & Co does two things. It looks after companies through investment and growth, and we look at recruitment and employment skills through that side of the business. However, the thing that's most evident and obvious is the physical regeneration. So I'm sitting here overlooking the Stadium Quarter. This is one of our key strategic sites. The fellow who heads all this up is John Laverick, the head of development. Very exciting and glamorous role he has too. So I'm going to pass you on to John. He's going to cover some of the highlights of the initiatives that his team is working on at the moment.
Good afternoon. Very nice to see everybody again. Last time we met, believe it or not, was 2019 when we met in person. Since then, obviously much has changed. Impact of coronavirus had an immediate and profound effect on the borough and its growth ambitions, and this will continue. Much will be written about the effects of what will or won't have happened because of COVID for many years to come. However, for us, what has not changed is the ambition and the capacity to deliver growth and development at scale and meet the challenges raised by coronavirus in concert with other challenges faced by development in Warrington. So what I want to do is sort of look back a little bit before we look forward and really sort of take stock about what we have actually achieved since that time. It's a relatively short period of time, 2 years, although not when you're not talking to people. And I'd like to gain from that a bit of confidence and a bit of optimism in how we drive forward.
2019 was the last version of Warrington Means Business and the Town Centre Master Plan, and in that were 6 really key areas that we wanted to focus and bring forward. First of these, Times Square. As I'm sure you're all aware, Times Square is complete. We have 3 really good occupiers in there, and we continue to see really significant interest from the market for occupying further units in there. Stadium Quarter, both John Street and the Youth Zone are on site, being built out as we speak at the moment, and we're starting to crystallise planning proposals around the surface car parking sites. Southern Gateway, this is a picture of the bus depot. So we're moving the bus depot from Southern Gateway up to Stadium Quarter, which really releases Stadium Quarter development proposals. Bank Quay Gateway, a very exciting development, this one, brought forward in concert with Homes England and the LEP, bring approximately 1,000 units to what is currently brownfield land, land that's used for commercial purposes, and really we feel this part to be part of the southern part of the town centre. So brought forward with partners, so a very exciting development, that one. Eastern Gateway, new townhouse Quattro Cockedge is currently in pre-app discussions, and we also obviously have Academy Street on site at the moment being brought forward. Unusually for a development conference, I have a picture of a bridge. The reason for the picture of the bridge is Centre Park Link. So Centre Park Link is now open, fully operational, and brings forward immediately. We've just given planning permission for over 500 units on Centre Park. Without the link in there, they wouldn't come forward. There's also brought forward a hotel on Slutchers Lane, again as a consequence of bringing Centre Park Link forward. Further afield, Omega, Mount Park Development has brought forward 2 more units and is starting on the 3rd. It's also now described as my new favourite term, which is an ultra prime logistics site, which I'll be using a lot more in the future, I think, together with 300 homes that have just been given planning. So I think just those on their own would be good enough. But for me, the real icing on the cake is the University of Chester have decided to come into the town centre, particularly in Times Square. And for me, this is a real endorsement of what we've been doing. It gives them a very accessible shop front right in the middle of the town, right next to good communication, right next to parking if that's required. However, 2020 saw seismic changes in working and commuting patterns, and what we may need from residential accommodation in the future. This provides a further challenge, but our ability to take our ideas and engage with our partners to deliver what we need is critical, and the resilience shown by all of us over the past few months shows that we can continue to deliver against these changes. However, the optimism needs to be grounded in reality. We know development will slow, and we know greater consideration will be given to risk prior to development. And whilst this is challenging, COVID has really served to reinforce the principles embedded in our master plan for the borough, and particularly the town centre, as we seek to change it from what it is at the moment to the fulfilment of the new town principles of supporting new, sustainable, multi-generational communities. To achieve this, there are three interlocking policies that sit underneath the town centre master plan, the local plan and the local transport plan. And these are SPD, First and Last Mile Programme, and the Central 6 Master Plan. The SPD is really about achieving livability at key scales. There are 4 scales in there. 1, town scale, 2, neighbourhood scale, 3, urban block scale, and 4, dwelling scale. And it's really about how they all work together. First and Last Mile, really quite a broad programme, but looks at how we can connect up various development parts within the town centre to really reduce the reliance on cars and increase the permeability of the town to walking and cycling. And last but by, and this is an example of the sort of thing we're talking about. So top left, you have what is a current Sankey Street, but currently very broad road, very small pathways. And what we want to see is a much bigger increase in pathways and cycleways, a reduction in the road size. This picture down in the bottom left is Scotland Road, and this is how the first and last mile starts to link up with developments around Newtown House, Quattro, Cockedge. I would encourage partners to really consider these policies in formulating developments and investment decisions. We think they respond really, really well to both the new and the old challenges we face in the town. From an economic point of view, Centre for Cities has confirmed Warrington has a strong economy. It's only marginally been affected by COVID, and we should see a short-term impact from COVID. As set out in the review, we continue to see demand in Warrington for residential, office and logistics space, and this points to great resilience within the Warrington market and strength to build on going forward. A combination of a strong market within Warrington and the desire to make the place livable for all in a manner that can deal with a change in use and function is felt to be an exacting demand, but one that is achievable and one that Warrington is well placed to deliver. However, the restoration of confidence on a broad basis needs help, and in addition to the steps taken locally, we're also supported by government initiatives that seek to boost regeneration and recovery. Examples of these: Getting Building Fund, that's funding the relocation of the bus depot from Southern Gateway to Stadium Quarter. Town Deals funding, established hubs within the town that focus on health and well-being, digital enterprise, culture, active travel. Housing Pathfinders, Banky Gateway, Newtown House, Cockedge. These are part of the LEP's local industrial strategy, and again in great profile because of it. Government funding through LEP and Homes England for major schemes such as Banky Gateway. The idea that we can build back better is one we can embrace with future schemes, focusing on decarbonisation, electrification of buses and placemaking. So all we have to do to take advantage of this situation is to deliver high quality developments, green and open sustainable places, accessible by foot and cycle, access to employment, capitalising on government help, and continue to work in partnership. So we'll wait until we're able to debate this face to face once again, but I do pose the question of whether we need any more. I'd like to thank Vince and Heather for their previous presentations, and I would particularly like to thank all the partners we've worked with over the last 2 years for bringing forward the developments we've achieved to date. Thank you.
Thank you, John Laverick. Ultra prime logistics site. You heard it here first. I've written that one down. John spoke about confidence, and we work closely with, for example, the local enterprise partnership that John mentioned, and also the business improvement district, to ensure that Warringtonians have the confidence to return to shop and work and live. Because we are in a privileged position here, and we do recognise that, because we want Warringtonians in 50 years' time to look back and see that we made the right decision. So it is a big responsibility and not something that we take lightly. So let's sum up what we've heard today. So we know it's been a horrible year. People have suffered throughout the town and throughout the world and continue to suffer. However, economically, retail in particular have been really badly hit, and we're doing what we can to support them. It's been encouraging to see that the property market hasn't gone away. There have been investments, not as many as last year and previous years as you'd expect. However, we still have got investors who are willing to take a gamble and take a chance on our town. There are going to be issues. We know the high street has got to change. Some of those brands that Heather mentioned, there are encouraging signs. If you speak to Ian Cox at Golden Square, for example, he has got interest in a number of those stores. However, the high street generally does need to transform for the next generation. There are a lot of people unemployed in Warrington at the moment, 9,000. We continue to support them through Warrington & Co, where companies are taking on staff. We are putting them in contact with each other. We want to be optimistic though, and you can see from some of those schemes, particularly the ones that the council has been involved in and support, that there are plenty of grounds for that optimism. Yeah, 2021 can only get better. So fingers crossed that we will be able to sit together next year, this time next year, have a bite to eat and a proper chat, because we have certainly missed it. If you want to speak to any of the presenters from today, do let us know, and we'll do that when it's safe and legal to do so. We'll put you in touch because we really want to get back to that level of interaction. I'll finish with some thanks again. The 10 sponsors, couldn't do it without you. We'll be knocking on your door next year, of course. Thanks again. BE Group, Vince and his team for all their patience and all their efforts, really appreciated. Yourselves for coming today. It's sunny, you could be somewhere else, but you chose to join us, so thank you very much. And of course, the lady behind the scenes, Angela Henke. I think Angela's done all of these, so we really appreciate her efforts as well. Now, if you want to see the presentations again, they will be available on Warrington & Co.'s channel on YouTube. Very exciting. Sadly, not my bit, but the full presentations. If you want a copy of the report, you can download it yourself and print it from the website. Or if you would like a printed copy, a glossy copy, do contact Angela. So once again, thanks to everybody for participating and your efforts. Really appreciate it. Have a lovely weekend. Take care, and we'll see you soon.